Welcome. The purpose of this video is to explain the key issues of the May 2017 Strategic Level Case Study. I am Gajendra Lianarachi, the Case Study Specialist. I will look at each issue in detail and how a particular issue will be tested in the real exam. Let's see. The Strategic Level May 2017 Case Study talks about a company, a soft drink company, founded in 1890 as a tonic to solve the stomach problems as a tonic. Well, let's look at history and let's look at management. What are the companies which started in 1890 in the world as a soft drink company or as a tonic company? That's right. There's only one which comes to your mind. What's that? Coca-Cola. Coca-Cola was founded in 1886. Pharmacist Pemberton started it in 1886. But sadly he was bankrupt, and in 1888 it was sold to S. Chandler. So Chandler was the owner of the Coca-Cola company, and he's the one who built it from scratch. Now let's get back to the case. The case talks about the founding family as clan family in 1890. See something? That's right. So throughout this case you see the symptoms of Coca-Cola, Pepsi-Cola and other soft drink companies. So I will look at all these issues and the developments when we discuss this. Let's see. Issue number 1 in May 2017 case study is the share price. Issue number 1 is the share price. What's the situation of the share price? Well, you know the share price has come down. It has dramatically come down. There are certain movements, but it is coming down. And most importantly, the biggest problem is the press is talking about it. What is the press saying? Press is saying the company is ineffective. Well, that's fine. But the biggest problem I have is the board of directors' response. They are saying that because it's competition. Well, there's a problem there. We know it's competition. You cannot say when it's a listed company that your share price is coming down because of competition. That's why your role is important, and that's why this becomes the first issue, because in a listed company, if the share price is coming down and there's a problem because the shareholders won't like it, what's your role in the exam? Your role is a senior manager, and you're advising the board on issues, strategic issues and special projects. So what's issue number 1? Reduction in share price. So you will be asked to develop strategy how to push it up. Let's look at issue number 2. Well, issue number 2 is a possible takeover. Why do I talk about it? Well, there's another company, Quench. The data is given. Quench is the largest competitor in the industry. I'll call it Q. So they have given information about them. What's the catch? Their share price is further coming down. Well, you see that now. What do companies do when their share price comes down? Simple. They blame it on others. And that's why they try to acquire companies which are doing well. So that's a simple fact. They try to acquire companies which are doing well and boost their earnings and enhance their PE ratio. So Q will try to buy your company. What's your role in the exam? Look at the options and see. Now remember, when you're a listed company, the shareholders are not bothered who owns the company. So you must make sure that you could persuade them and you could communicate effectively that we could do better than the hostile takeover. How can you do that? Very simple. You need to know the present value of the future cash flow is better than what they offer. So if they offer $12, we need to show in the long term we could get $15. That's the only way to get rid of a hostile takeover. Right, issue number 3 is new product development. Well, they were talking about new products. They were talking about how you fail in the water products and the water market. So we are going to look at our own product of clean water, distilled water. So maybe the case study will look at new products like vitamin water or like sports drink associated with water, more nutrition. So you'll be able to look at these issues, and they will request you to look at strategic options, how to build the bottled water market. And that's issue number 3. Let's look at issue number 4. Definitely it's franchise. Why franchise? Because our largest competitor Q gets how much? That's right, 45% of revenue. I repeat, 45% of revenue is from franchising. Well, sadly, we do not franchise. So definitely we need to franchise, we need to boost our earnings. Remember, Q, our largest competitor, is 5 times larger than us. 5 times. and 45% of that comes from franchising. So immediately we can boost our sales and also profit. All these are integrated. Let's look at issue number 5. Clearly it is CSR and ethics. There's a lot of issues by the third parties, by pressure groups talking about health related issues, especially on children, and there's watchdogs criticizing the company. There's a lot of articles in the case study, so we need to look at ethical issues, we need to look at CSR, we need to look at how to manage them in the long term. Issue number 6 is clearly derivatives. The case study talks about financial derivatives, financial hedging. Yes, that's right. They talk about Q, the comparator. Comparator's issues and comparator is hedging effectively. And if you look at Q's balance sheet, they have got a profit of hedging. We are not hedging at the moment, but we need to look at possible hedging techniques, possible risk management techniques, especially if you are investing overseas, especially if you are getting an income from the franchise. So that will be issue number 6. Little bit of P3, what are the hedging techniques, advantage of hedging, and how to move forward with hedging. Issue number 7 is the brand. We are a wonderful brand. We have been in business for more than 100 years. We were the inventors. Our main brand, fruit, is the competitive advantage in the market, and it is the main product. We are not doing anything for this brand. So it is your responsibility as a strategist to make sure this brand from the present situation becomes a global brand. Coca-Cola, target Coca-Cola, that's our benchmark. So you'll be tested on how a brand can be improved, what are the decisions that need to be carried out, and how to stretch the brand without affecting, that's right, core competence. Remember, when you stretch the brand, core competence will be affected. Make sure your brand is stretched, used within the same corridor. Right, issue number 8 is an acquisition. There's a lot given about the share price, a lot of articles in the market. So we need to grow. How are we going to grow? Very simple. If organic is not available, or if organic is late, we can acquire. So case study will look at acquiring another company, maybe in a new country. It might not be the same company. We might acquire a supplier. We might acquire a farmer who produce natural fruits, produce fruit products to us. So look at that integration, vertical integration. Definitely it will be tested. Since Q's balance sheet is provided, we might look at a merger as well. But remember, your role is to make sure the company moves forward. So don't get carried away to get easy money by buying another business. It should be within our values. Don't forget, that's right. We were in business for more than 100 years. So that's issue number 8. Issue number 9 is structure. Look at this structure. Plenty of areas for improvement. Well, you see the IT manager, the IT division is under the accountant. Can you imagine that? IT run by an accountant. I'm an accountant. Well, there's a problem, isn't it? And logistics. Who's running logistics? That's right, the marketing guy is running logistics. Well, definitely you need to look at a new structure. You need to change that. You need to get IT into a strategic level. You need to have IT as a resource. Information should be a resource and an asset which provides a strategic competitive advantage. So we need to restructure, definitely matrix probably with functions and products separately. So we will look at that later in detail, but structure is issue number 9. Issue number 10 is to do with our manufacturing facility. We have a single factory in a single location. That's a massive risk. So we need to look at decentralization. Maybe relocating the factory. Maybe you can have your main factory and other factories in other places, specifically closer to the area where you get natural products, the fruits. Well, factory relocation will be a strategic question. You need to look at the cash flow and the strategic advantage. Right, issue number 11 is stakeholders. Clearly, when the company is not doing well, the shareholders are concerned. You know, the founding family, clan family owns only 18%. So what does that mean? Well, others are interested. So you need to look at stakeholder management. Well, that's right. Mandela matrix comes into practice. We need to prioritize what their needs are. But don't forget, regulation is also playing a very important role, specifically if you are going to introduce new products and those products has a health concern. So you need to really look at how to strike a balance between stakeholders. But remember, you can never satisfy stakeholders, you could only manage them within a certain level. Issue number 12 is the risk register. This will clearly be tested. We are given a serious risk register and the issues. But what's the problem? You're right. The problem is we don't manage it properly. They have given the control issues and they have given who's responsible. For example, the first risk they have identified is product safety. And they said the production manager is managing it. Now, wrong. Product safety is the responsibility of everybody. Everybody should consider safety into the strategic decision making, and they have taken a risk like regulation and legal issues. And then how do they manage it? Positive relationship. Now you need to go beyond that. You need to look at a bigger picture. Children, their lives, issues with health has to be considered. So we have a risk register. They have given us some control, but the key issue is you will be asked to develop strategy how to minimize the risk. That's right, how to minimize the risk into a manageable level where gross risk becomes the net risk. That is important. Let's look at issue number 13. Clearly, they will test portfolio. There are plenty of products, specifically the cola, orange and cream soda products are going down. They are not doing well and they don't have a strategic competitive advantage. They have clearly said we are losing the advantage, and most importantly they have given the competitor data. Who is the largest competitor? Q. That's right. So BCG matrix will be tested. You will get in the exam revenue, market share of each product, revenue, market share of the competitor's product. You'll be able to compare that and think, we have a problem child, they have a star, so this is a problem. So you need to rationalize existing products. Issue number 14 is consumer trust. This is considered in the case in a very high significance, and that's their future. You need to look at trust. We are losing it, and health is a big problem. There are a lot of people are concerned, and that's a major issue. If we address this issue properly, of course, we cannot eliminate sugar. Then nobody is going to drink this product. Definitely we have the sugar product, but definitely we should show intent. Intent. That's your role as a strategist. Develop strategy, develop a PR situation. I mean, we don't have public relations here. Well, our marketing has to be expanded. We need to tell the marketing guy, look here, don't worry about logistics. Leave it to a side. Look at the bigger picture. Look at consumer. Look at their life. I mean, nobody is going to drink this if your children are affected and if they are in hospital. So remember that. We need to look at public relations in a bigger scale, and we need to build trust. Issue number 15 is modern manufacturing. We have a traditional manufacturing system where carbon dioxide is introduced to the can at a particular stage, and it's a standard process. And the biggest problem, we get our harvest from the areas different from the company, and we need to distribute it, and we have a warehouse in a separate location. This creates a very high risk. So we need to identify how to use modern management techniques such as just-in-time, such as lean manufacturing will be tested, and this will be integrated clearly with our value chain. So look at our manufacturing system, because they have given the details of one product. What's that product? Fruit. You are given a clear cost breakdown, and you have given clear direct and indirect cost. So you need to think how to improve this process. That's right. That's right. We might be tested on a business process re-engineering. We need radical thinking to improve our productivity, and that is important. Issue number 16 is strategic objectives. Even though the company is 100 years old, we are not doing well. So you'll be asked to look at what are the future options and what are the possible strategies. You will be asked to look at different investment and look at 3 strategy tests, Johnson and Scholes. Which option is effective for us? And you will be even asked to develop KPI, key performance indicators, for each new option based on a clear objective. You'll be given an objective. Yes, look at the SMART approach and see how Each objective will be tested based on a key performance indicator. Well, yes, that's right. Balanced scorecard can be tested, connect with key performance indicators because we need overall long-term growth. Issue number 17 is the threat associated with own brands. What are own brands? Simple. Supermarkets come out with their own cola. You see it everywhere in the world. What's the problem? They have taken 23% of our market share in off-trade products. I repeat, 23% of the market share is taken by supermarket owned brands. We need to really develop a strategy. Well, we can't fight with them. Why? Our products are sold in the supermarket. We need to what? That's right. We need to build a relationship. You need to build the trust. You need to build the relationship, and also you need to develop a strategy. Maybe direct product profitability. Look at their profit, look at our product, and look at our profit margin, share it. Remember, the future is all about partnerships. We cannot do this in isolation. And remember your strategies. Do not write anything which antagonize the supermarkets because they sell our products, they sell the competitors' product. Remember, any strategy developed to attack or to overcome this threat should be collaboration. Collaboration. Keep that in your mind. Issue number 18 is the supply chain. We need to rationalize the supply chain. We need to build trust because at the moment third parties are involved in sourcing. I repeat, third parties are involved in sourcing. Now, no problem with that, but we need to make sure we have adequate control. Somebody should audit the process of raw material sourcing and the quality, and we need to make sure that our information system, our networks, our databases are integrated. What's the topic which comes to your mind? Correct. Big data. Big data will be tested. How this information, don't forget we are a global company, how the information of suppliers, farmers, distributors are integrated. Definitely they will test about information, and what information will be tested in the future. You will look at this. And remember, most of the models like McFarlane grid can be tested for information. Remember, it's the future, not today. Issue number 19 is about quality of water. Remember, everything we do has to do with water. Water is the main ingredient, even for energy drinks, even for soft drinks, even for food drinks. Water is the key. So if water quality is affected, you're dead. You're dead and buried. Remember, it's survival of the fittest. This is a modern game, and you need to look at the game. Everything matters. A simple issue with water can completely ruin your business. You're dead, and not only you're dead and buried in this dynamic market. So you need to recommend a proper testing. You need to look at detailed testing. Lot of P3 will be tested, and the role of the auditor will be tested. You need to look at control systems from the water, sourcing of water, and the process of water into CO2, into mixing acids, into mixing syrups, and before it is bottled, it should be tested. Don't forget, after bottling, there should be random test. You can't get your consumer to test it. You need to do that. So it will become a critical issue. Issue number 19 is a distribution channel. Issue number 20, the final issue, is distribution channel. Let's see how this will be tested. Well, we are never been a global company. Why? Because we never looked at these options beyond our country. So the key thing is to look at something beyond your country is distribution channels. Because we don't need to develop or build a distribution channel in another country. There are plenty of companies which operate in these countries who have excess capacity. Think about Coke, think about Pepsi, and think about Coke and Pepsi, how they operate in each country. Think about your own country. They don't have their own channels. Yes, they develop relationship with the channels, and that is how you succeed. Remember, an effective strategist need not money always, need money. You don't need money to do things. That's why you become a strategist. You look at advantage, you look at the market, and then you can develop a competitive advantage based on effective distribution channels. So those are the key 20 issues that will be tested in May 2017 strategic level. I call them KTI. If anybody needs my guidance on this, you can always email me. Thank you for listening. Good luck with your exams. Remember, be a strategist in the exam.